Adam, thank you very much.
And you know what's on the table? Real estate developers are ready to dive in. Airlines, plenty of big U.S. companies stand to benefit if the island paradise, just 90 miles off the coast of Florida, reopens its markets.
Yeah, think about ADM. They are dying to get in. All the food companies, Nestle's, they all want to get in there because they see a potential market. So how much would a free Cuba stimulate our economy? Let's ask our Fox panel about it, including Pat Powell from Powell Financial, Victoria Barrett from Forbes, Gary Kaltbaum of GaryK.com, and Peter Schiff, author of Crash Proof. The potential, Pat Powell, of Cuba is enormous. It was not for nothing that when all those Cubans moved to Miami, Miami boomed the way it did. They are natural entrepreneurs who've had a cap on their entrepreneurial powers for about 50 years. They're just waiting for that cap to be lifted.
Sure, they are. I do think, though, you'll have temporary dislocation, sort of like when the wall came down between East and West Germany, that you had a tremendous problem in the short run, but in the long run, it's an incredibly positive thing. I think it's more positive for Cuba than it is for the United States because money will initially flow there, but I also think it provides another source of educated and less expensive labor for companies, and so you might find pharmaceutical companies might want to go down there.
Educated labor as well.
Labor,
I mean, Intel could move down there tomorrow.
Absolutely. So I think it's a win-win for everybody involved, although I think it's going to take a little bit longer to get going.
I was going to say, Gary Kaltbaum, are we kind of getting ahead of ourselves here that it may take quite some time? Plus, his brother, Raul, is still going to be in charge, and they're probably of the same mentality, are they not?
Yeah, Liz, this is simply a transfer of power from one dictator to the next. Raul's been running the country with Fidel for the last 50 years. I really do not think much changes. And when you think about it, they are dictators. And what happens if the economy does open up and helps out their people? It takes away power from them, and that's what a dictator does not want. So, look, we want to be hopeful. We'd love to open up the economy there, but I just don't think it's happening in the near term and as quickly as some people think.
Well, Victoria, I agree partially with what Gary says. The fact that indeed Raul was actually executing people right after the revolution. He was pulling the trigger. So he is a nasty piece of work. At the same time, I cannot overemphasize enough the entrepreneurial capacity of the Cubans in Cuba.
Sure.
When I was down there, I mean, every single Cuban had some little operation going in the back room that they were trying to hide from the local police. They managed to do so. So all they need is just a little encouragement to get that moving.
Yeah, you've had to be an entrepreneur in a closet down there because it's practically illegal. But this isn't democracy. The guy in power is the brother of the guy who was in power. But Gary brings up a great point, which is like, was this embargo all that successful? We've had it for 50 years, and for those same 50 years, Fidel Castro has stayed in power. You open up the borders, bring American business in, he loses power. It's probably a sign of a failure of embargoes. That's the real question.
Peter Schiff, let's fast forward to when Raul is not in power anymore, or he has a change of heart and decides he's going to become Democratic, which is highly unlikely, obviously. What starts to soar immediately? What begins to blossom?
I don't know. I mean, we've got some exposure down there. We have some Canadian companies, some Spanish companies that we own that have some hotel interests down in Cuba, some natural resources down there. But I don't really know how it's going to play out. I mean, first of all, you're talking about democracy. I mean, what they really need is capitalism. I mean, the two don't necessarily go hand in hand. I mean, you can see what's going on in China. So what they need is really to restore private property, entrepreneurship, to eliminate government regulation. And, they might get ultimately democracy, but it doesn't necessarily mean that their economy is going to thrive unless they can limit the power of government.
Well, Gary Kaltbaum, that's an interesting point, and it clearly China has found a way to surmount the communist power that dictates over the people and introduce capitalism. Raul, for all of my hesitations about him, claims that that's what he wants to do. That's what he's telling the folks, and clearly there have been moments in the past 10 years when he's tried to do that.
Well, look, the proof will be in the pudding, as they say, whether something does get done. Look, Peter is right, but to affect change, I don't think it's going to come from the government. To affect change, I think the people need to stand up and say we want change and start demonstrating and do something about it. Until that happens, I think it's going to be more of the same. I do not think much gets done. Listen, if something gets done, we'll fly in there, we'll put some hotels. I don't think it's the biggest deal to our economy, though, in the long run, but I would love to see it happen.
Pat?
Gary's right. It's a bigger deal for Cuba than it is for us. And I would disagree on some points. I think that the Cuban dictators would absolutely love to get some money in there. They have been really in trouble ever since the Russians have fallen apart.
Look at the Chinese, Victoria. Once they, as communists, got a taste of entrepreneurial attitude and certainly the money that comes in from capitalism, they're loving it. Could we see some type of sort of bifurcated form of it like we see in China?
I think we would probably have to. You know, being in America, it's so easy to say, let people vote and capitalism will flourish. But what China is showing us is that you probably do need some government involvement along the way to make things happen. But the opportunity is huge. You know, Cuba's infrastructure is ailing. That's an opportunity for U.S. companies and for local citizens there to really thrive.
Okay. And they still make great mojitos and have wonderful cigars. We don't want to forget them either.
I'll tell you something.
Yeah, we get
to
cigars.
watch.
That's big.
What should we watch quickly in 5 seconds?
Watch Venezuela. They subsidize Cuba, and I'm not so sure they're as friendly to Raul as they are with Fidel.
Very good point. Well, dueling Democrats in a presidential primary.
Seemingly destined to...
Side. And then as far as earnings, if you back out a one-time charge, they actually beat the street by 2 pennies. So you can see that's why the stock is showing a little bit of optimism today. But the reason why you're not seeing a huge rally in the stock is because of its outlook for 2008. They did come in very soft for their guidance for 2008. And, you know, again, and showing that Walmart's certainly not immune to the broader factors that are affecting the broader retail sector at large.
Now that stock is doing well. Office Max is up 7% today. The stock is up 7%. They reported a 23% rise in fiscal fourth quarter net income, but they've also done a lot of cost cutting. Does that help Walmart as well?
Yeah, Walmart pursued a several-pronged strategy, and if you look at the board, I've got a look at sort of all the steps that Walmart took to get us to these great numbers that this company had. First, international sales was a huge growth driver. The company actually saw sales abroad go 19%, which is huge because domestically sales only grew 5%. Then they did some massive cost cutting and price cutting. So they did reduce costs, but they also reduced prices at the front line for consumers, and that really helped them. I mean, back in November 2nd, they kicked off their holiday campaign for holiday sales, reduced the prices on 15,000 items. They also improved customer service, and they cut unprofitable product lines. You know, they had dabbled in things like fashionable and trendy clothes and things. I mean, that's not what people go to Walmart for, right? And they backed out of
fashionable paper clips.
But wasn't some of what really worked for Walmart this time around a pricier item, and that would be the flat screen TV?
Yes, and certainly electronics did very well over the holiday season, and that was a contributor to higher sales. Again, it was stocking up on items that people wanted, and at least for the holiday shopping season, it was the flat screen TVs. All
right, Shabani, stay with us if you can. We want to add in our Fox panel into this discussion. Gary Kaltbaum, what does this tell you about the way retail sales are going in the country?
It tells me Walmart's a great company and they continue to attract people into their stores. Look, all my research and all my visits to other companies tells me that the consumer is pretty much spent up and not pent up here, and I've been saying this for months. At every number I'm saying, and if you just look at the retail index, it's still down 25–30% from the last few months. So I just think the consumer is going to continue to have some problems, and if we keep seeing oil heading north, that's not going to help at all.
Oil, listen, does sometimes figure in, gasoline certainly, to Walmart's prices, Peter Schiff. I mean, they count that as part of their sales sometimes, and it makes you wonder just what really is driving these numbers, and what does it say about the consumer and the economy right now?
Certainly. I think more and more of what consumers are buying at Walmart are everyday necessities like food stuff and oil, and I think the fact that Walmart is getting extra sales because they're advertising cheaper prices, I think those greater sales maybe are coming at the expense of their competitors as people are are so desperate now for low prices that people who weren't shopping at Walmart are going there. But I think if you look at what's going on in China right now, you know, the source of cheap goods to Walmart is coming to an end. Look what's happening to inflation in China. We are exporting a lot of inflation to that nation. I think we're very close to a major upward realignment of the yuan, and that is going to make cheap Chinese imports a thing of the past. You're going to have to see across the board significant price increases at Walmart.
Yeah, although, Victoria, they're kind of covered there in a way because Walmart stores are expanding all over China. In fact, the one place in which Walmart workers are unionized, guess what? It happened. It's in China. So they are kind of spreading their risks by appealing to Chinese consumers.
Sure, that's going to be where a lot of the consumer growth is going to be going forward. But Peter makes an important point, which is, you know, we have gotten cheap goods from China for so long, and the only way that Walmart can lower prices while at the same time increasing their margins is by putting pressure on their suppliers, many of which are in China, and that can only last for so long. Walmart is a fantastic company. The fact that they could come out with good numbers in a time like this really speaks to management, but you know, the consumer in the U.S. is really strapped, and you know, Best Buy said that so much recently. They're not looking for a great year.
Yeah, they sure did. That certainly shocked some shareholders of Best Buy that really felt, oh wow, I've got the good company because Circuit City isn't doing as well. But Pat, if what Peter says is true about the yuan, because of course the U.S. has pressured China to let its currency float more freely, that would mean that it's going to see an upward revision eventually. Peter makes that point that these exports are going to become so much more expensive to the U.S. consumer that the $11 polo shirt at Walmart might not be $11 anymore. It might be $15 or something.
Or it might be $11.35. You know, the fact is that if China gets too expensive,
or it might be $50.
We'll go to Indonesia, and if the Indonesians get really expensive, we'll move to Malaysia. There's lots of places for us to go and get
all
cheap
those
goods.
Currencies are going to go up in tandem.
Hold on a second,
Peter.
She's not finished.
Okay.
Go ahead.
You know, and unfortunately, there was some inflation numbers that came out in China, and that's not good news for the Chinese. They're going to have to deal with that. But this is how free markets work. You know, we are interrelated. Something that happens over there will flow through here. That will make maybe some of the things that we've been exporting or importing from there, maybe we'll be able to have them made here. This is how free markets work.
And another thing, Shibani, I want to bring Shibani in for a second because, Shibani, one thing that Walmart has proven is that even in retail sales, this increase in productivity, which is so important in our economy, has affected the way Walmart does business. They've computerized like they haven't done before. Their inventory is better under control than it has been before. So they are doing things that help it increase its productivity.
Yeah, and they've certainly been an innovator in that space. I mean, you certainly take Walmart, you've seen Walmart take the lead and really see and take on best practices that the entire sector, if not broader sectors, have followed and copied in that manner. But I think a big issue when we talk about international sales is, you know, everyone is worried about a global slowdown. And what is that going to mean? International sales are a big source of growth for Walmart. That could also highly impact
gang on the panel.
You have to remember.
Hold on, Peter, one second. Gang on the panel and to our viewers, oil just topped $100 a barrel. Now, we saw this several weeks ago, but it's happening again. Right now, it's pulled back just a moment to $99.96, but there may be more conviction. There it is, 100 this time around. Remember, last time it was one trade.
It's going to 150.
Okay, why do you say that, Peter?
Well, I've been right on it for years, but you know, there's a triple top in oil right now at
150, Peter.
Well, we have a triple top there at 100. I think there's a lot of people short. We're creating so much inflation. Remember, we are the source of all of China's inflation problems. We're exporting it to the world. And oil is about to explode just like all the other commodities. I mean, look at platinum over $2,000 an ounce. Look at silver up almost 50 cents an ounce today. Look at soybeans at $14 a barrel. All these prices are rising in tandem because of the most inflationary monetary policies the world has ever seen. Oil's going to explode. I think it'll be $150 a barrel before the end of the year.
The Weimar Republic has got to be thrown in there, Peter, as one of those inflationary experiments.
That was just one country. That was one country.
Yes, I know.
Really
this is the whole world.
Anyway,
Pat, go ahead.
It's still supply and demand. Yeah. Even though we're in a slowing world economy, we are not in a worldwide recession. OPEC is announcing that they're going to cut production. So we have a supply side dislocation. At the same time, demand is growing. It's inevitable until we get our act together and change the supply dynamic.
Demand is inflation.
Supply demand.
The bigger issue going forward is our savings rate stinks, and the wealth effect, which was heading north for so long because people felt that their house prices would grow to infinitum, is now going south now. That is going to affect consumer behavior, and that is my big worry going forward. And all this talk about a definition of recession or not, all I know is things are slowing down, and I hope they don't tip over.
Victoria, go ahead. You wanted to chime in.
Yeah, exactly. I mean, oil prices have been going up for a long time, and it didn't seem to be hurting the American consumer. But what's different now is housing. We don't feel infinitely wealthy because our housing values are declining. So all of a sudden, the price of gas matters a lot more.
Okay, let me just tell you that the height that it hit was $100.10. As you see, it was like touching a very hot stove. It pulled back to $99.97. But Shivani, what are you thinking here?
This is a number that precisely affects Walmart's customers. It is a lower income consumer that reels back very suddenly with changes in housing and changes in gasoline prices. This is a big deal. Going back to Walmart, this is a big deal to Walmart and its consumer base, particularly here in the U.S.
Well, $100 oil is going to be the floor pretty soon. It's not going to be the ceiling anymore. You know, what used to be resistance will become support.
I want to touch upon something Peter said. Gift card statistics now. A ton of that is being spent on food and other necessities.
Really?
So that's heading that way also.
Well, by the way, the price is just flirting with that $100 line. It may close above, it may close below, but it is significant that for just a couple of minutes here, it was significantly above that $100 mark.
And some of this, keep in mind, if you're tuning in just now and you're saying, why is oil hitting $100 a barrel? You're getting different stories from different areas, but we've got a couple of things going here. The Texas refinery explosion, the falling dollar, OPEC saying that it will keep supplies tight, at least some OPEC members, including Venezuela and Iran. So a lot of these things coming together, David, to create $100.10 a barrel oil.
First time since January 3rd. We will wait and see where it settles. We're on oil next. See on that one.
So we have these surging oil prices. Just last week, prices were below $90 a barrel, but now they crossed $100 today to $100.10. That threshold moments ago. But what's going on here?
And how will these surging prices affect you, the consumer? Let's throw that to our Fox panel. Gary Kaltbaum, first to you. Of course, it does take a while for the high price of oil to whittle its way down to the price at the pump. But how soon do you think it'll happen?
Oh, I think probably in the next 2 months, usually about 8-10 weeks. I do want to make one point. There's all this talk about speculators causing this. Oil prices have been in a bull market for many years now. Of course, there's speculators, but there is a real supply-demand problem. There is not enough supply, too much demand across the world. Of course, we have Peter's thoughts also on inflation, which I do agree with. There's a lot of things working here at the same time, and it's not pretty, and I think we are going higher.
Yeah, I mean, come on, Peter. How much longer can the government try and say that consumer prices, inflation, are within the parameters that are acceptable? Oil going this high. I mean, there's always the chance that you see that disconnect between crude prices and what you see at the pump, which we saw over the summer, but it doesn't seem like that may happen this time.
No. Well, remember, this isn't even an oil story. This is everything an inflation story. Oil prices are rising as the result of inflation. And the reason it's a global inflation is, you know, we have a trade deficit of about $60 billion a month. So we're exporting $60 billion into the global economy. And the world, you know, doesn't need this money because we don't produce enough products to export. So what happens is our trading partners sell these dollars. But what happens is foreign central banks don't want the U.S. currency to collapse. So they buy all these dollars with money that they print. So we print a bunch of money, we send it abroad, foreigners print a bunch of money. It's a money printing fest. As a result, prices for everything are going up, including oil. And oil is going to keep going up as long as the world is printing money.
Well, and Pat, we now have something crossing the wire here from the Bank of England saying that monetary policy can't stop rising short-term inflation. So indeed, once again, Peter is right, maybe not necessarily in degree, but at least in his sentiment. And the point is that inflation is a concern worldwide.
Inflation is a concern, and yes, there are parts of what we buy every day that are higher, but there are also things that I buy that are cheaper.
What?
My cell phone. The cost of operating my cell phone. My first cell phone cost me $2,000 to buy that actual phone. Now I'm picking up a cell phone for $50. All right. My monthly fee on my cell phone on that first go round was $500 a month, and I can't tell you, my calls were on one piece of paper. Now I can't. If I get my bill printed out, it's like hundreds and hundreds of calls, and yet my bill runs at about $120 a month.
Peter is like a child when you go to the bathroom.
You have some things that are higher and some things that are lower.
No. Hold on. Consumer electronic prices have been falling for decades, for 100 years. Look at what happened during the 1970s when we admittedly had double-digit inflation. All types of things like digital watches and clock radios and all those things were falling in price. Television sets were falling in price back then too.
And housing is falling in price. Housing falling in price is also disinflationary.
But hold on a second. Again, let me just give Victoria a chance to chime in because
the cost of living is going up.
Victoria, you're from that part of the world where all these wonderful things are invented that do add to our productivity and that do keep costs down.
Sure.
But that doesn't stop inflation from
Peter, go ahead, Victoria.
But I agree with Peter that, if we were buying our gas in euros, it wouldn't be so painful at the pump. Inflation is adding to higher fuel prices. But the Fed is in this tricky dance where they want to inject, liquidity into the market. They want to boost the American consumer, but at the same time, there's signs of real inflation. Rates are really low historically. So.
But Victoria, I wanted you to talk to Pat's point, which is the fact that productivity, the more that we get for the less amount of work, does keep inflationary pressures down, correct?
Yeah, that's a huge boost. Productivity adds growth to the market, and Silicon Valley is a shining testament that we're still in a productivity boom. I meet with companies all day that are inventing new ways to make workers more productive.
Quick, Peter, quick.
Productivity, when you have productivity, it helps hide all the inflation that the government is creating. Just because the free market is working to lower prices doesn't negate the government printing all this money and causing prices to rise.
Gary Kaltbaum, do you think oil is going above 100 tomorrow and is going to stay there a while?
I don't know about tomorrow, but I'm 100% sure it's going higher, and it's going to stay and go higher than that. I do want to make one point, though, that I think is vital here.
10 seconds.
For a year, Ben Bernanke said there was no subprime problem, and you see what happened. He better start acknowledging a possible inflation problem where the bond market is going to tank and interest rates are going to skyrocket.
We all agree on that. Thank you, gang.
If you ever thought of giving up, you're still talking, if you ever thought of giving up your day job and following your investment hunches for a living, this next segment is for you. Stay with us.
That's next. See you. Thanks very much. Well, Hillary Clinton and Barack Obama, which candidate has more appeal to small businesses and Main Street America?
Our Fox panel is back now to talk about it. And why don't we start with Peter Schiff here. Peter, what do you think? Who appeals to Main Street America with the things that Rich just outlined?
Well, unfortunately, they both appeal to Main Street, but I mean that's the problem. I mean, Main Street, they're appealing for political reasons, but of course the policies of both Clinton and Obama are going to substantially hurt Main Street. All they're promising is bigger government, which is going to be financed with even more inflation. The average American is being clobbered right now. The cost of living is not rising anywhere near as rapidly as his wages, and that's going to accelerate if they come into office. The Democrats come in and promise even more government spending than they have now. This is how people get elected. They promise something for nothing, but unfortunately the government can't deliver it. All they can do is redistribute the wealth, and if they start imposing some of these policies where they, increase taxes on the people who create wealth and create employment, they're going to have a lot less wealth to distribute, and they're going to end up redistributing poverty,
Pat,
not wealth.
Clearly, they're trying to get the nomination right now, and to do that, they have to pull to the left.
Right, yeah, and I do think that Main Street's a little smarter than Peter does. I think that an awful lot of people out there can actually see through this rhetoric, and they can see we're promising. We're going to give you all. We're going to answer. Big government is going to be the answer to all of your problems, and all it takes is a little bit of a look back to see every time big government tries to be an answer to all your problems, you create a very big mess.
Can I just say, Gary Kaltbaum, though, you talk about big government, you talk about $1 trillion war. Okay, so you have that on one side from where we come from, and it's just if as Obama and Hillary talk about scaling that back down, there's your money for these programs quickly.
Well, look, they have that ammo. End the war, we have more money for you. But look, it's never worked for a president to say, I'm going to pay your bills, I'm going to buy your gas, and everything else under the sun. And that's really what their speech has been about lately.
We got to take a short break. We'll be right back. Well, certainly today, if you have to mention one thing that moved the markets, oil. Prices settling in New York at their highest ever, 100. Should we bring out exactly where it was?
We have it.
Here you go, folks. $100 and one. But well, you don't have to show the chart. All you have to do is show this.
We'll show a tight shot.
100 and a penny. 100 and a penny. That's what did it today. That will buy you a barrel.
Of oil.
2 barrels of oil.
We're holding 2 barrels of oil right here.
Which, by the way, if you don't cover your shorts, you're stuck with the actual physical oil.
That's right. If you thought and you were betting that oil would go down, and you got caught flat-footed and your expiration happened, you would get some type of large vehicle backing up barrels of oil, and you own it. You own it at this price, $100 and a penny. Crazy. This happened about 215, 220.
Just about.
And then the price settled, but you saw the stock market lose much of its momentum due to that high oil price. So what's ahead for the markets? We turn again to our Fox panel, and we also include Tracy Burns here on this. Pat Powell, tell us, what do you think when you see $100 and a penny for oil? Where's that going? Gary Kaltbaum's convinced it'll go higher beyond this.
Well, I think it's going to go higher, too, but mine is the supply-demand argument. Until we get some kind of change in supply-demand, it's going to 120.
But how does that affect the stock market?
It affects the stock market because to the extent that you're taking money out of the consumer's pockets, you're putting it into oil, into gasoline. You're not able to go out to the retail store and to buy other things. You're going to see the concern is that there'll be a pullback by the U.S. consumer.
Tracy, there was good news today that drove the market higher. Good news from Walmart, OfficeMax, etc. Oil was high pretty much all day, but the moment it touched $100, that's when the market moved south. Could you note that moment on the floor there?
Absolutely. I mean, actually, I was here with Alan Valdez right before it happened, too, and you saw it just reversed and plummeted. You know what? We were using the word conundrum all day. It was kind of a conundrum why oil was up and the market was up at the same time, because that doesn't typically happen. We started this day off almost up 100 points. We had this fabulous commodities rally, and everything was up. The oil stocks in particular, Hess, Halliburton, ExxonMobil, Chevron. Let's keep in mind that today Chevron is trading in the Dow for the first time. So you have Chevron and Exxon, which was a lot of the reason for the big rallies, why we were up at one point. Of course, then, once it hit 100, psychology hit, sentiment hit, it all came tumbling down. We also had the financials not helping us at all, too, today. You know, we got news from Wall Street Journal reported that Lehman might potentially be writing off more. You had Credit Suisse, like the Peacock, the Untouchable, coming out and saying $2.85 billion write-off, plus they were lowering first quarter profits by $1 billion, which did not help things at all. As you said, we had good news from OfficeMax and Walmart, but that didn't help the retail stocks much at all. And the tech sector was down, even with OfficeMax's news. Tech sector was down, even with Microsoft announcing that they were going in with a proxy fight, and they were basically going to rally the shareholders to help this deal go through with Yahoo. Still didn't help things after all. So here we are. We're down about 16. The transports are down now. We have a lot of red on the screen, even with volume at about 1.3 billion. Liz and David, back to you guys.
Okay, what about you, Gary Kaltbaum? Do you think that oil touching and going through $100 a barrel was what moved that market? It seems pretty evident that it was. Do you think that you'll continue to see them interlaced, the markets and oil?
Yeah, today, direct correlation between oil prices and the stock market. And I make note, even when the Dow was up 100 today, most retail stocks were down because of that. And I also have to make note of something else. Financials were down all day today. I'm very bearish on them. I think Tracy said it, and I believe it. There's going to be billions more in surprise write-downs in the weeks to come. And I think that could have a weighing down effect on the market also. So not a pretty sight. When you have interest rates going higher, gold going higher, oil prices going higher, we got some problems for the market at this time.
And Victoria, we should mention the NASDAQ was down as well. Microsoft, more word there about what they may or may not do with regard to Yahoo.
Right.
How do you see the tech sector?
Well, yeah, Microsoft is getting a lot more aggressive. The tech sector is very interesting right now because we have Hewlett-Packard announcing earnings in a couple minutes here now, and everyone's watching to see, are they going to be more like IBM and somewhat immune to recession-like slow conditions, or like a Cisco, which projected a tough year ahead. So Hewlett-Packard coming up is a really big piece of news for Silicon Valley and tech.
Well, yeah, we should let people know Hewlett-Packard trading up about 22 cents. Well, now it's 17 cents for the moment. But Peter Schiff, your thoughts on the intertwining of the oil market and the stock market today?
Well, you know, I think the market was going to sell off today regardless of oil prices. It's a bear market. We rallied on strength overseas.
Down 17 is a sell-off, Peter. Down 17 is not a sell-off.
No, the bigger issue is the bond market. You know, look what's happened in the 10-year bond. We've moved from a low of 3.2 yield about 4 weeks ago to 3.9 today. If rates keep backing up at that pace, we can be at 4.5 a month from now. We can be at a 5% yield on the 10-year in 2 months. Nobody is looking for this. This is going to be, if this happens, this is going to be a major negative for the economy, for the stock market, for the housing market. And I think that is more related to what's happening in inflation and the price of oil than in the day-to-day gyrations of a bear market in stocks.
And there is the closing bell, the trading day coming to a close, and what you see there, down 13 points. Doesn't look so bad, but yeah, in a way, I guess Peter's right. We did see a sell-off from up close to triple digits, and you can blame this. $100 and a penny. This is what will now cost for a barrel of oil.
Yep. This is it, $100.01. Now, we don't know how long that'll last. A lot of questions about whether the political news might actually be getting better in places like Nigeria. If that happens, will it pull back? But clearly, it's what affected the market today. The market was trying so desperately to have a triple-digit day, it seemed, about midday, and then the news that oil was going to stick at that high price and actually topping above 100.
So the trading day comes to a close, but the business day continues. Here's the financial news you need to know today from Vox Business. Yes, that price of oil soared.
That was the news.